One of the biggest psychological tricks that happens on people is they come to crypto for easy money. Don't like the part about I'm holding something and it's down 30, 40, 50%, 60%, 80%. My reward is it could potentially go to $1,000. That's the whole point of the market. So you leave and then you did action. It's the actions taken from those emotions that determine your success. Hello and welcome to one of the worst and one of the most fun parts of being in crypto. It's the feelings that you go through during the bear market. It's not fun because of how it feels, especially when you're new. It's really fun because if you can tune into these things, it's a huge signal of opportunity. So if you're somebody who's sitting here in this time, assets are low, they've been low for a long period of time, and it just feels like the pain never ends and it's gut-wrenching, this video is for you. And I don't care if you like this video. I don't care if you subscribe to this video. I just care that you listen and listen to the end. And if by the end this adds value to your life and improves your life, then I recommend to listen to the next one. That's all I ask. But today we're going to talk about emotions. Because what I'm seeing, because I work with so many people and projects in this environment, what I'm seeing is that people are terrified. And they're in that mindset that everything has gone to shit. Crypto sucks, it'll never come back, and they've lost all their money. That's the mindset that I'm seeing around. I've been here for enough cycles that I know exactly that this is coming, and we prepare for it, and you're meditating, and you have all these practices. But talking about it and helping you understand why that's happening is going to be very powerful in this journey. So that's what we're going to talk about today. You see, when you're looking at the human psyche and the market, we see them as two separate things. In reality, the market is just a representation of the psyche of all the humans that are playing the game, because investing is a game. Often we tend to go into it as if we are fighting against someone or some person. We're not. The market is this non-emotional representation of what all the participants are thinking and feeling. And that's why it's so volatile, because one day people feel great about something. Next day they don't feel good. Next day they feel great. And that reflects the prices, right? For example, if I think gold is a great value, I'll buy it for $10 more than it's worth today because I know it's great value. On the flip side, if I think gold is now worthless, I'll sell it for $10 less than what the market is telling me. And me feeling like that about an asset will make it go up and down. That's why Bitcoin was worth 0.8 of a penny when nobody believed that it was worth anything. Then it was worth 70,000 US dollars when people thought it was just everything in the world, which was just a couple of years back. Now people don't even want to buy it for $30,000 because they think, oh, it's not worth that much. So one of the biggest psychological tricks that happens on people is they come to crypto for easy money. It's about making quick and short money in this environment because you've heard so many people have got rich. What you probably haven't heard is that a vast majority of people lose all of their money because they come into this environment with the understanding that they're just going to get rich quick. That greed of wanting to get rich quickly usually leads to you not having the patience to last through the 4-year cycle, right? Or you don't have a strategy to last through that 4-year cycle. So that mindset that somehow it's easier to make money in crypto compared to other markets is not true. It's actually more difficult to make money in crypto because it's more volatile. So if you're here with the easy money mindset, how's that going? Is it feeling like shit? Are you getting rich yet? Alongside that, what ends up happening is we come here with the understanding that we want to participate in the market in a way where we don't have any pain. That when the pain comes, we just want to leave and run. Because if it's not easy money, I want to run away. The way I like to approach the market is I'm here to not lose all of my money. If I learn how not to lose all of my money, then the making money part of it will happen. Now that's a slow and steady approach. It takes a long time to pay off, But what it does is it makes sure that I don't lose my gold bars. I don't lose my Bitcoin. I don't lose my money compared to me wanting to get rich very quickly, right? And you have to determine what kind of an investor you are. Are you a trader who likes to get in and get out, which means you're playing against traders who know how to play that game and you'll probably lose? Are you a long-term investor who invests and rides the waves out until it's at a much higher valuation and you sell it then, which usually isn't the easy money mindset, which very few people have in this space. Because alongside with whatever intention you come into the market with comes the level of greed that you're bringing into the market, right? Like, you don't go buy a house and then 2 years later go, why am I not super rich? Why isn't this thing making me so much money? It might be making you some money, but you don't get life-changing money in 2 years. You don't buy stocks and expect that in 2 years you're going to make a 30x. That's illogical. Yet people come to crypto and expect that same thing. We come in with a greed of wanting to make money now, right? Which then leads to the other side. You become very sensitive to you losing money. So when you go buy an asset and its value goes down, you are worried like, oh my God, I just lost all my money. But remember the rule. If you didn't sell it, you didn't make any money or lose any money. You still just have the asset, right? I always give this example that if I buy 10 bars of gold at $100 each, and then I have 10 bars of gold, somebody comes to me the next day and goes, your 10 bars of gold are worthless. I'll be like, no, they're not. They're bars of gold. You may believe they're worthless. You may want to pay me $0 for them, but I have 10 bars of gold. The next day, somebody comes and says, I'll buy those gold bars off of you for $200 each. I'm like, okay, great. I bought it for $100. Now I'll sell it to you for $200. Now I've made the money. I didn't lose my $100 per bar when the guy came and said it's worth less. That makes no difference. The prices go up and down accordingly. Same thing with crypto. That when you're entering an asset class, that you bought something that went up 20, 50, 60x. I think Ethereum was somewhere near 60 times its 2018 low, okay, when in this last bull run. When something goes up 60 times, right, goes up 6,000%, and then when it drops 80%, it's still many, many multiples higher than where it started. That's the volatility we're talking about. But people love the part about 60x growth, but they don't like the part about I'm holding something and it's down 30, 40, 50%, 60%, 80%. Okay, so when you actually run the calculation of I'd rather go up 50x and then drop 80%. That means I'm still 10x above where I was before, right? But that greed and that easy money mindset is the reason why most people get lost. The second piece that a lot of people don't understand is the risk that you're taking in the market. All of this should be defined before you enter the market. You have to understand who you are as a person, what kind of risks you're willing to take, and why it's worth taking the risk, how long you're going to take that risk for, how you're going to lay out your assets, so on and so forth. Most people haven't done that analysis. They don't have a clear roadmap laid out. So when things go wrong, you don't know anything about how to make decisions, right? But looking at the risk itself, the word risk refers to the risk of you losing your money. That's the risk. I'm risking that I would lose some part or all of my money that I'm investing into something. That's equivalent to the reward I can get. In a good trade, you have lower risk and higher reward. That my risk is I'll put in $100 into this trade. My risk is I would lose all $100. My reward is it could potentially go to $1,000. That kind of a trade is a nice trade to make for me. But risk is simply the risk of losing all of your money. And the reward is that you took that risk and now you deserve to be paid for it, right? It's the unknown risks that are that are not quantifiable. The unknown risks are the things we can't see ahead of time. We can't predict them. We did not know that COVID was going to happen when it happened. We don't know if a war is going to start. We don't know if a crypto is going to fall out of favor. We don't know any of those things. So when you're entering a market, you have to consider that I'm taking a known risk, which crypto is very volatile. A lot of it's not being used. There's a lot of scams. I'm taking those risks and I'm navigating those. But I'm also, in my mind, considering that there are unknown risks that will show up that I will have to deal with along the way. And if I don't have a cohesive plan of how to deal with them, it all just turns into a shit show. And then you end up sitting here wondering like, why isn't this thing making me rich? It's been, when did you enter? Oh, I entered in 2021. Well, okay, then obviously you haven't gone through a full cycle. Once you go through one full cycle, then you understand, okay, there are times when I'm making money. That's when I take money off the table. There's times when if I don't get out, it looks like I'm losing money and I have to wait until the next cycle, okay? But knowing that there's unknown risks along the way that will show up, and that's just the game that you're playing. So, how do you deal with that? It's understanding the psychology of the market that has been the most powerful for me. It's looking at it from a perspective of this thing is a roller coaster. When people feel great about it, the prices will pump. And when people feel like shit about it, the prices will drop. And I will feel the same things along the way. I'm not immune. But the market is a mirror to our emotions, right? When things are going up, everybody's happy. Everybody's exuberant. Everybody looks like they're getting rich in crypto. That was 2020. And when things are going down, everybody's breaking down their relationships. They're fighting with each other. They think they're getting poor. Their self-worth is going down. All of these things are happening. But in simple terms, on the way up, greed increases and fear decreases because you're getting more and more greedy and you want to get richer and richer. On the way down, greed decreases and fear increases. And we're going to look at all that. But if you can understand that and understand that the emotions that you're feeling are a representation of what's happening in the markets, then you can learn to go against those feelings and actually benefit from the process. So let's look at today, okay? Fear casts a massive shadow in the bear market, okay? In the bear market, everybody's scared. Everybody all of a sudden thinks that technology is no longer going to change the world, that blockchain and crypto isn't going to revolutionize everything. People give up. They're like, Bitcoin is worthless, Ethereum is worthless, why did anybody buy it? Nobody even talks about it. What people do is they leave crypto groups. That's what I'm noticing. People quit, they leave, they want to just run away from the whole thing because they're ashamed, because they think they've lost all this money, when in reality, they haven't even sold the asset. Yeah, you bought it for $1, it's back at 50 cents today. Before that, it went from a cent to $1. Do you think it's not going to go from 50 cents to $5 later on? But people become irrational. But it's the fear of losing all of your money and the shame that's attached to that that causes people in the bear market to feel like everything is hopeless. This isn't the first bear market. This isn't the last one. In the middle of it, you should feel like shit. That's the whole point of the market, to make you feel so bad about something so you leave and run away with whatever amount of money you have left. And then you did actually lose your money. At the same time, the narrative around shifts into a fear narrative. The narrative in a bear market is like, recession is coming, businesses are collapsing, the world's about to go to shit, and this is just how it's going to be. And the average person looks at the situation today and projects forward and just thinks that's how life is going to be. The smart investors are looking 6 months to a year out. So they see if today there's the maximum amount of fear and everybody's convinced that everything is going to collapse off of a cliff, then today is the day I'm going to invest so that later on, when I think people are going to be much happier about this asset, I can sell it to them. So it's the shadow of the fear that makes the biggest difference in the bear market. If you're feeling the fear, good. Use that as a signal to know, okay, I'm feeling fear. Many people are feeling fear. Therefore, I'm going to act against that. Now, one of the most significant representations of this is the Wall Street cheat sheet. So just looking at this here, this is the Wall Street cheat sheet, okay? It represents that wave of emotion that we go through. Right now we're down here in these red bits. anger, depression, disbelief. You know, everybody's convinced that everything's gone to shit, prices are low, they've been there for some period of time, it hurts, and there's despair. All of that is part of the emotional roller coaster, to the point where we have a graphic to literally point out what you're feeling. That means you're not the only one. But down here, everybody cries about what's going on. But down here is the time to actually buy. But do you see anybody around you jumping for joy and telling you to buy crypto? Is grandma telling you to buy crypto? Is your Uber driver telling you to buy crypto? No. Right now, nobody wants to talk about it. They think it's the worst thing on the planet. But these emotions are the reason why it's a good idea to go against your own emotions and actually take them as a signal and start to enter the market. Because again, we're looking 6, 12, 18 months down the road when this other process comes back. Now, on the flip side, when the good times come back, things will start to pump and people will still not believe that it's right, because they'll just remember the bad times that just recently happened. They still won't get in. Then by the time we get into this optimism, belief, thrill stage, that's when everybody starts to tell you, hey, I just bought some crypto. Grandma's like, hey, honey, I bought some crypto. I made a bunch of money from it. You should buy it too. And by that time, the news start to tell you all of this. Crypto is going to go to the moon. It's going to 100,000. YouTube will start to scream a certain tone. When that happens, everybody rushes in and dumps their money in. And then this euphoria happens when nobody gets out. And then somebody comes in and takes your money. The people who got in at these bottom parts come in, emotionlessly clean out your money, and then you do lose all of your money. So understanding where we are in this wave. You're never going to know exactly where you are, but understanding the general range is important. And you can do that from around you. Ask people around about crypto. Read the news about crypto. You know, look at the prices. Look at the narrative. All of that right now is telling us we're down here in this like depression, disbelief phase, somewhere around there. Okay? So now going back to me. My experience of this is that in these times, I have to become a psychologist. I just have to remind people again that they laid out a plan that included this whole psychological training. That meant that we have an understanding of what this process looks like and how to deal with it. And one of the biggest things that we do in this whole process is just meditate. Whenever emotions come up, feel them like a human, and then just, continue forth. Another great way to look at this whole process is this. It's called the Crypto Fear and Greed Index. It's literally an index of, are people feeling greedy or are people feeling scared? And this, like clockwork, tells you where people are in their emotional journey, right? Right now, people are still kind of in between. They're scared, but they're not terrified, which tells me that there's probably going to be another moment where people go back into a fear state, right? This was the fear from back in when Luna and all that stuff happened. People were terrified. That was a great time to buy. In retrospect, that was a great time to buy. But usually this index will tell you where people's feelings are. Now you can see people bounce back and forth. Our emotions are so volatile that we'll go, fearful, greedy, and you'll bounce back and forth, right? So it's not like it's 100% guaranteed. Or you can trade each one of the turns. But on the very broad scales, you can. Because when you have a timeline that's very long, you can easily start to see, hey, now for the last half a year or a year, people have just been in despair. Or like they say in trading, there's blood in the streets. So then you can actually trade that. Okay. In this process, as these emotions come up, one of the best practices is to introspectively look at yourself. And you'll notice that when the markets are up and you think you're getting rich and life looks great, you start to have great relationships with people around you. You start to see yourself better. Life feels better, so you show up better in your life. When the market prices are low and assets are low, you're going to feel negative within yourself. And then your relationships may suffer, or the way you treat people, or the way you see yourself, or your self-love may change. There's a whole dynamic of shifting that happens. At the same time, the narrative around you shifting. That when there's good times, the narrative is good. So the world feels good. So you behave good. When the bad times are coming, the narrative feels bad. The world feels bad. So your behavior is negative. See, it's not the emotions that affect your success in investing. It's your actions taken from the emotions. I'll say that again. It's not the emotions that affect your success in investing. It's the actions taken from those emotions that determine your success in investing. So when you feel fearful, that's normal. Everybody feels fearful. But if you feel fearful and you run in and you sell everything you have at a 70% discount, now you've made a big mistake. Whereas somebody who is sitting on 70% losses, and it looks like your portfolio is down 70%, it looks like you lost 70% of your money, even though you didn't. You're going to go in and you're going to meditate on that and think, okay, this is 70% down. Did I put too much money in at the beginning? Am I too attached to this thing? Does this money represent me as a person? Or am I looking at the money going up and down and I take that as I've made this much money, I've lost this much money? That isn't the case. If I have one Bitcoin, I have one Bitcoin. I haven't made anything, lost anything. But what is it about this process that's affecting me emotionally? How is it controlling me? Is it a number on a screen that's going up and down that's controlling my psychology, which is absolutely ridiculous when you really think about it? When you do that introspective analysis, you start to realize that you can distance yourself from it. You can actually create a separation between what it's trying to get you to do and what you feel. It's not easy, and especially in the chaotic commotion, it's not easy, but that practice is great. Introspectively look at yourself and try to distance what's happening there from you, because you're an entity on your own. Your self-worth is not defined by a number on a screen. And if it is, that's dangerous. Now, in that introspection and in this process, you're going to gain mastery over your own emotions, right? It's gaining mastery over the actions you take from the emotions that are coming in. Because when the market tries to scare the shit out of you, especially for me, I get happy because I'm like, great, this feels terrifying. Everybody's scared, which means now is probably the time to stay calm and take the right actions. For me, that tends to be buying because everybody's scared, so I buy. When nobody wants crypto, that's when I want crypto. Or for me personally, during those times, I go build. I'm like, I'm going to go build businesses. I'm going to go build crypto. I'm going to go build all of these things while everybody else is terrified sitting in a room worrying about how much money they have. I focus on making more money during those times. On the flip side, when the greed comes in and everybody starts reaching out about how good they're doing in crypto, that's a signal to me like, okay, now this emotion of greed is coming in. It looks like I've already made a decent bit of money, but I still haven't made it because I haven't sold anything. At that point, one of the hardest things is to start selling, right? But talking about today, if you feel fear and you feel like you've lost all your money, go back and do an introspective analysis. What does the money mean to you? What is your relationship with it? How is it affecting you? How are you going to deal with that? And then look at like, did I make a plan before I did this or did I just jump in because my friend said? Big mistake. If you have a plan, go back and look at your plan that you wrote with a sober mind. Like, what was my plan? What did I say I'm going to do during these times? Oh yeah, I said I'm going to stay calm. I said I'm going to, play this for 3 years. A big part of this process is people just have too short of a timeline, right? If you came into crypto thinking that you're going to make a ton of money in 3 months or you're going to get ultra wealthy within 2 years, what kind of a mindset is that? Is that the mindset that you have anywhere else? Try to go anywhere in the world and think like, I'm just going to buy something and I'm going to get super rich within 3 years, right? If your timeline is, I'm going to get very rich within the next 10 years, and here's the steps that I'm going to take. I'm going to increase my earning capacity. I'm going to invest in the right assets. I'm going to give them time to grow, blah, blah, blah. Then that makes sense. But 2 years, 3 years for you to be in a market and expect to get rich doesn't make sense. And it causes all these emotions. The people I know that have the 5-year timeline, they're relaxed. They're like, this game goes up and down. I don't care. I have a life. I have my businesses. I have other things going on that are my self-worth. So I'm going to invest money that I'm willing to lose, and then I'm going to let it ride for 5 years and then count my chickens. Not this like super quick wanting to get in and wanting to get out. Those people have then also set ground rules for themselves, right? In the strategy, you've laid down ground rules. I will not be one of those people that rushes in when everybody else is rushing in. I will not be one of those people that will be scared when things are low. I will not be one of the people who thinks that the numbers on the screen going up and down is me making money or me losing money. I will not act from a place of emotion. I will meditate. I will make sure my relationships come first. I will make sure my self-worth isn't tied to money. There's so many different ways of doing it, and we have processes that we take people through, and we give you all of this education. And I've done it so many times on YouTube, but I just felt like now is the time to do it because I'm seeing everybody crying. And it's the same story that I've heard 100 times. And especially as a beginner, it doesn't make sense until you've stayed here for about 5 years. But setting those ground rules with a sober mind in good times is what's going to take you through these bad times. Because in the end, what has actually happened? More people are building on crypto than ever. Crypto projects and blockchain projects are blowing up. The BlackRocks and banks and all the governments are starting to turn to it. In the background, the conversations that I'm hearing are profound in how they're deploying these technologies to actually change the future of finance and of the world. The value of most of the good cryptos has gone through the roof. But the market today doesn't even see their value reflected because people's emotions are not like that. So the reality of what's going on doesn't match the emotional stance that most people have, which is exactly the reason why I like to trade that. Because those are the times when you really make the generational wealth. But setting ground rules is absolutely huge. The emotional strain that you feel during the bear markets is because our perspective shifts. When we're coming into the space, we have this perspective of like, okay, especially the way that I like to teach it. The perspective is, okay, I'm going to go in, I'm stable, I'm consistent. This isn't money that I need for the next 3 to 5 years. I'm putting it somewhere where I know I have a good chance of making a healthy return. I am buying assets that are good assets with a framework of how exactly to pick the ones that are considered to be valuable going forward. I'm understanding that there's unknown risks that I'm taking, but because it's money that I don't need for a long period of time or I'm willing to lose, it's okay, right? But it's when the bad times come, we shift that perspective. We're like, oh my God, it's never going to come back. Oh my God, I just want whatever amount of money's there out. Oh my God, this feels so bad. Oh my God, why isn't it getting me rich now? Oh, I had different dreams. I had different expectations. It didn't go the way that I expected to. This person was wrong. This person was wrong. That's just the way life goes. So it's the perspective shift that makes a big difference. So here's some great perspectives to remember, okay? The way you stay grounded in the middle of the storm is you focus on the long term, right? It's very difficult to make money in crypto short term because it's always doing this. But when you focus on the long-term goals and long-term view, you remember like, oh yeah, I got into this because I didn't want to lose my money. Or I got into this because I didn't want my money stuck in a bank and the bank steals it. Or I got into this because I believe in the technology. I got into this because I see the potential. Whatever that long-term view is. Plus, I got into this for the 5-year game. And I'm only 2 years in. Why would I cry about that today, right? Or I got this to make life-changing money or generational wealth. Well, generational wealth takes a generation to make. It's not something that happens overnight. But having that long-term perspective and seeing like, is the long-term thesis of crypto and blockchain still safe? Is it still likely to do what it's meant to do? Are the projects that I'm invested into still likely to do it? Great. Now, there might be a chance, like, for example, quant. Everybody was loving quant. Quant was going to change the world, A lot of people bought a lot of quant. And then, during the bear market, a lot of stuff changed for quant. A lot of projects started to not work with them. A lot of governments started to not work with them. That's an unforeseen risk you took. Now, in the next wave, do I think quant's not going to go beyond its all-time high? That's very unlikely. It's still a solid project. You'll at least break even and be able to get out. Do I know that for sure? No. But understand that there's risks that you're taking. But the long-term focus allows us to get rid of a lot of that anxiety that happens in the waves, right? It's like remembering I got onto a roller coaster because it's fun. And the funnest part is actually the drops. So I'll enjoy this like it's a roller coaster rather than taking it on as some kind of thing or personal attack or whatever. Also, going back and reviewing your strategy, right? If you've written down a plan, which if you're listening to this, it's very likely that you have because you've worked with me. Go back and review that plan and look at it and go, hey, has my plan shifted? Have my goals shifted? Has my mindset shifted? Where is my strategy? Am I following it? Have I forgotten stuff that's part of it? It's reviewing your plan and reviewing yourself regularly that allows you to then make sure that if there's anything that's shifted, the plan can shift alongside it. Now, you don't want to constantly shift your plan because that's the next thing. Make sure you stick to the plan that you came up with when you were not emotional. When you're not emotional, you can logically set out a plan and follow through on it. So when the emotions come up, it allows you to go back and say, nope, this is the logical me. And I said I would not sell this thing for 3 years, and now it's been 2 years and it feels like hell. But I know my thesis was right. I know the reason why I got into it was right. It's still solid, and I'm going to follow my plan. Stick to your plan. A huge technique is avoiding media sensationalism. Because you're going to go in with a plan and an understanding and and then the world's going to try to convince you otherwise. And when everybody started singing the tone that the world's going to collapse and the recession's going to happen and all of this stuff, if you get affected by that, they're going to trick you into selling it at the bottom. That's just how it goes. So avoid media pumping narratives to you in a way that makes you feel a certain type of way. And if it does, separate it from your actions. Act from logic that comes from your plan. Another thing is having the right mentors, not one, multiple. Having the right mentors that have that mindset, that have that long viewpoint, that have been there long enough for them to actually understand how this process works. That's why I keep constantly teaching this, because I'm like, look, you can see everybody's feeling bad right now. This is normal. This happens during these times. Everybody feels bad. One day we'll look back and laugh at it. But if you're somebody who takes actions from this time, you will cry about it. Well, the rest of us laugh about it. But having the right mentors and a varied set of different perspectives from mentors that are providing you real information about what's going on, and you make your own assumption from that. And ideally having people that keep you calm during the turbulent times and tell you to pull back during the greedy times. That's huge. So all of that is part of this process of building emotional resilience during these times. Because the market is only human emotions. There's nothing else. It's only human emotions. And the only way it controls you is it controls your emotions from the number on a screen. And if you can simply detach your emotional state from that number on a screen, have the patience to let it do what it needs to do. Stick through these times and focus on, your life, or at least look at it with logical perspective, emotionless perspective. Do the inner work and actually allow yourself to deal with these things in a way that doesn't cause you to act against yourself, and have a plan that you follow through on. Nobody's going to be able to hurt you. Other than that, it feels like shit. Congratulations. Welcome to the market. You don't get the benefit of feeling amazing and getting rich without feeling like shit first. So hopefully that was helpful. If it was, I told you. I bet you at the beginning that it would be helpful. So please.